Hello YouTube, it's your boy the Crazy Trader again. Another Friday with your favorite stock review. Real quick, I'm here going to give you a stock review about it. Like I said, I'll be doing real estate investment trusts, just REITs. For now, I'll be analyzing them and giving reviews about them. Just a quick one today on a Friday because I'm extremely tired. I need to go to bed because I have to work tomorrow. And as you can see, hey, let's go back real quick. As you can see, if you look in the top corner, my IVR, I got 2,000 shares in before the ex-dividend day. Okay, so I'm 2,000 shares in deep before the ex-dividend day. So I'm really excited about that. That means if I'm going to get paid dividends, I'm going to get paid dividends on 2,000 shares of IVR, which is 9 cents per share. So let's say roughly $180 or $180, which will be reinvested into IVR, that you know, the drip system, you know, so the dividend reinvestment system. So yeah, the $180 will be reinvested into IVR and it will buy more shares for me. So this is something that I'm looking forward for in the long term. My goal is still 2,500, so until I get there, I'm not stopping. Okay, so 2,500 shares of IVR, and then we can move on to the next. So my account didn't do too well today, but that's okay for me. This is a long-term goal, not a short-term, you know, foresight. I'm looking long-term investment. So most of the stocks that I have are solid stocks, and I know that they are going to do really well. So I'm not really bothered about them. I'm not touching any of them. I'm just adding to IVR. I'm adding to IVR. I have some financial power right now, 1,800. So I'm hoping that I could, when there's a little bit of a dip in IVR, because I believe some people have locked in their dividends already, because the ex-dividend date was, I think, on the 9th. So the dividend has been locked in already. So a lot of people will start, maybe some people will start selling, especially day traders and all that will start selling when they start, and the people who are in for the long term will start buying. People like me, people like you, because I know a lot of followers are big time IVR, you know, followers. So today, if you're here to look at this, I am going to show you a stock that is the favorite real estate, you know, investment trust of a lot of analysts when it comes to real estate investment trust. The stock you're looking at is Realty Income. Okay, their ticker symbol is just O. I don't know why the ticker symbol is just O, but it is what it is. Okay, so Realty Income is a monthly dividend paying stock. They pay dividends monthly, every month. So every month you get a dividend, and this stock is amazing. Trust me, I've looked through it. I've been through all of it, and it's an amazing stock. The all-time high was around 82. That was in February 2020, before the pandemic hit, and I think it went down all the way to 40 something. I think 43. Let's see. Yeah, there we go. 43.60. I envy the people who got it here. Okay, 43.60. Those who got it here, they are going to make bank. Trust me, those who got it here are going to make bank. Because I'll tell you why they're going to make bank. Because these guys never cut their dividends. They kept on paying dividends throughout the pandemic. They didn't cut their dividends. They didn't do anything to it. And as a matter of fact, by December, they started increasing the dividends. This is a great company. It's a solid company. Trust me. 24 billion market cap. Very solid company. 4.28 dividend yield. Great company. I'm not going to lie to you. Look at the analyst rating: 55% a buy, 45% a hold. There's no selling. Nobody is selling. Trust me. This company is doing. And one thing is also in the S&P 500. It's included in the S&P 500. So if you're wondering, what kind of stock is included in the S&P 500, and if you know a little bit about S&P 500, and you know the 500, these are great companies that only great companies are included in the S&P 500. If you're not doing too well, they're going to drop you. They're going to drop you like a hot potato. So this is a great company, and you should look into it. I'll make it a little quick read for you. I wanted to show you something. Okay, there it goes. Realty Income. It rents nearly all of its 6,600 properties to retailers, an industry besieged by consumers shifting their shopping habits to the internet, which the pandemic accelerated. However, it offsets this risk by leasing to large, established, financial stable companies such as Walgreens, Dollar General, and Walmart. So this is what they do. They lease their portfolio. That's their their buildings and everything to very large established financial, companies like Walgreens and Walmart. And these people, they sign, 30, 40, 50-year leases, so there's no way they can break the lease. They have to keep on paying their rent. So these people are keeping on paying their rent whether there's a pandemic or not. So Realty Income is still making their money whether you are in the pandemic or you're not in the pandemic. They have some leases towards AMC and all those places, but those people are still locked in the pandemic, but they are still paying their rent. So they don't bother about whether you're in a pandemic or not. You still got to pay your rent. So let's go to the dividend payouts that they've been given, and this is what I want to show you. From January 2020, they were pay, because it's a monthly dividend stock. You see, January 2020, this is January, they pay 23 cents, February 23 cents, all the way to, look, even in June they increased it to 23.4, okay, 0.2234. That is 0.001 cent added to it. It's not really significant, but it is still an increment in dividend, okay? Especially when we were in the thick of the pandemic. That's in June last year. So they maintained their dividends throughout the year, throughout the whole year, and they even increased it. Look at it. They increased it all the way, and they maintained it, and then they increased it again in December 2020, and they are maintaining it again. So it's a great company that you should look into, especially if you are, into long-term investing and you are investing for dividends and you want some drip. Listen to me. This is the point I want to make. A lot of people buy shares or they buy a stock without really looking into it. You always, like I say, you always have to do your own due diligence. Don't just jump on YouTube and watch a video and go buy a stock based on what somebody is saying. I could be just pumping a stock, okay? But this is the point. If you just do a little research and go to realtyincome.com, that is their website, they give you everything that you have to know. Almost the information on their website is so amazing that you would even wonder, because if you hop on their website, you don't even have to look anywhere else, okay? But just to double check whether what they are saying is right, that's why you have to jump onto other websites and see if what they are saying is right. But every information that you need is right here. A member of a S&P 500 and S&P 500 dividend aristocrats, okay? This is what they do. Monthly dividends, strong shareholders return, 15.3% compound average annual total, okay, 4.4% compound annualized dividends, 608 consecutive monthly dividends paid, 94 consecutive quarterly raises, 6,500 plus property and the long-term net lease agreements, 600 different clients, 49 states, Puerto Rico and United Kingdom. They're even in the United Kingdom, London and all those places, UK. And 51 retail and other industries. I don't want to go into all this, but you can click on the monthly dividends. They'll show you everything that they are about. Total return, they'll show you everything, their portfolio and everything, because I don't want to go through all this because it's going to make the video long. But if you just jump onto this, you're going to have so much information that you've never had before. And make sure you look into it. This is a great stock. They still have a very good upside. I'll show you. They still have a very great upside. So if the upside is around, let's say 80, and now they are at 65, let's say a $15 upside with monthly dividends. So if you're looking to invest in the long term, this is a stock that you're supposed to look at, okay? And then there's a drip effect, which then you can reinvest your dividends over and over again. Let's say you are 20 years old and you're watching this video, or you're 25, you're watching this video, and you're investing into this company for the next 10 or 15 years, and there's a drip effect, going up over and over. You're doubling your money. Trust me, you'll be doubling your money in every like 4 or 5 years. I haven't done the maths with it, but that's it. It's easily doable, especially with you buying at a discount right now at 65, because there's still about $15 more to go to get to 80, okay? And if it gets to 80, I'm pretty sure that it's going to go up, because it did a good moving up before the pandemic hit. Look, from 50 all the way, it kept moving up all the way to 80 before the pandemic hit. So you are still buying at a discount if you're buying it right now, okay? This is a quick one for you guys. I don't want to waste too much of your time, and like I said, I'm already tired myself, so you guys can look into this yourself and then buy it. This is a good buy. It's a little expensive, I know, $65. I know it's a little expensive, but if you want the good stuff, you got to spend the money for it. And like I always say, you always got to risk it to get the biscuit. And scared money don't make no money, right? Yeah, it doesn't make money. So I'm out of your hair. So stay blessed, and I'm out. Peace.